I think you will see problems with the banks that are over
Commercial real
leveraged
estate,
and yep, and undercapitalized. They're, as you and I were talking about off air,
70% of
and those are the
commercial.
regional banks. Those are the U.S. banks
Well, let me
in the state of
throw
Minnesota,
that
like
state out
U.S.
there.
Bank.
The
These are the
70% of commercial real estate, which is ready to be the loans need to be reset,
yeah,
owned by small and mid-sized banks.
right. The regional banks like U.S. Bank in the state of Minnesota, which isn't a commercial bank, it'd be a large regional bank. But these banks are the ones that are on the hook for this, and it's the unwinding not just of the commercial real estate. It's mortgage-backed securities in general, which also contain residential real estate. As unemployment continues to go higher, it's great to have a 3% mortgage until you lose your job, and then what happens? And one thing that they could really do to ease the burden would be to allow mortgages to travel. And if they did that, it would be a very big step, but they haven't done that. And so if you are locked in at a low rate, great. But what happens if you have to move for whatever reason? The real estate market is in trouble. Commercial real estate market is in very big trouble, very big trouble.
How
And you're
about
right. And the systemic nature of these banks failing, it creates a very, very big problem. To me, that would be the big problem in 2026. And
underemployment? Because people don't have money. It's really
well, that's it. And
obvious.
it's only going to get worse. And then you bring in AI, which kneecaps entry level jobs and a lot of good white collar jobs. My son, who works for me now, was an accountant at Price Waterhouse, getting paid 80 grand to analyze a balance sheet of a real estate investment trust. AI can do that in 1 second without having to pay $80,000 to a kid out of college. And you and I were talking about your upcoming travels. When you go to the Minneapolis airport, look around. There's one cashier when you check out, when you come out, if you park your car there. Everything else is automated using your
Yeah.
credit card. You go into every single gate. Minneapolis, I think, has one of the nicest airports in the country. Every single gate has a restaurant, just about, but those restaurants are there's iPads that you order from, and a food runner and a bartender and a cook, instead of waiters and waitresses and busboys. And there's three people running each one of these. You go to the McDonald's in the airport, it's a giant kiosk. You don't order from people anymore. You push your stuff in, and there's two, three people there. So you're beginning to see not only big corporations who will shed high-paying jobs in the name of efficiency, which is what AI and robotics will do, but it will come at the expense of massive, massive job cuts. And it's not just blue collar or entry level. It will go all the way up into high-paying white collar jobs as
Yep.
well.
Yep.
I think it's a very big deal. And so as that happens, this is why you see the Federal Reserve now pivoting, getting rid of quantitative tightening as they said they would do, which would be selling all of these assets off their balance sheet, which again will reignite the inflation spigot on top of lowering rates. And the rumor is that they're going to start buying $40 billion a month again of treasuries to suppress rates because no one wants our treasuries. But this is in order to ease the burden of an employment market that is starting to crater. And I don't know how much it will really work, but they figure if the cost of running a business gets much, much higher, then they will come at the expense of employees. Well, if they lower rates again, which got us in this problem to begin with, um, it will address the inflation problem. I mean, the unemployment problem. But when you mess with Mother Nature by suppressing interest rates, there is a price to pay, and that is you create distortions in asset prices and misallocations of resource and capital. What I mean by that is, what's your house worth at 3% versus 9% on a mortgage? A hell of a lot more. And resource and capital. If you're a company thinking of why they're laying people off, if you think interest rates will stay next to nothing forever, sure, let's expand. Let's build another wing. Let's buy that other company. Let's add a division. Let's hire 40 more people. And then all of a sudden rates go way up and the cost goes way higher and your business goes way lower. What do you do?
You're screwed.
So
But the
you're
Fed is
screwed.
the Fed's in a corner. They can't raise rates anymore. They cannot do what they traditionally have done. I mean, this is what's quietly
But
been
right,
going
what
on.
happens if you don't? If you don't, that means that you end up incentivizing more debt and destroying the value of the currency, because
they're in a corner.
that's right. They're damned if they do, they're damned if they don't. And that is why the most important thing to take away from all of these videos we do is whether you buy gold or silver from Miles Franklin, I hope you do. But if you don't, buy assets. You need to own assets right now, period.
That's right.
If you own currency, you're dead in the water. And you can measure anything going back 50 years. Take any asset, anything that you would own, your house, a car, anything, measure it in ounces of gold, and the price is collapsing. Measure it in dollars and it's going through the roof. The dollar is dying. And the problem is that we measure things in terms of dollars, measure it in terms of ounces of gold. And the interesting thing about this, the new BRICS unit currency that they're using, they are measuring each currency. So it's a basket of 40% gold, 60% currency, BRICS plus currencies. Those currencies are measured in terms of their value against gold, not gold value against those currencies. In other words, it's how many ounces of gold can you get for your currency, not what is your currency worth in gold. It's the other way around. And if you measure things in ounces of gold, which is the barometer, which is the stability, then all of a sudden you see the truth. But it's measuring it against currencies that are continuously devaluing through inflation and through money creation. And in particular, every currency around the world for years has devalued their currency against ours, not only to make manufacturing more competitive to sell to us, but because the dollar was the world reserve currency. And they couldn't get enough dollars just simply through trade alone. So they had to buy dollars in the open market by selling their currency, which devalues their currency, which increases the value against our currency. Our currency goes up against theirs, so they can buy oil, transact business. And so it's been a faulty measuring stick. Why measure the value of your currency against a basket of horse crap currencies that are continuously devaluing against yours? No, measure it against gold and you see the light very quickly. You see the truth.
That's right.
And that's what these
What is
nations are
really
doing
happening. And they've been suppressing it for so long. It just they're not doing it.
for that reason, to
And
mask.
to mask and to accumulate. Now that they've
Right.
accumulated, it's like, okay, let's let the floodgates open. We're ready to deal with the reset of the dollar. This is an indicator that there's something is happening. They're ready to do a reset of some sort. The prices are going up. They're making killing. I also think it's why we're seeing so much stupid crap in media and nobody's talking about all these important issues. It's like, how really are we really this dumb in American
Even when
society?
Reuters writes an article about silver, it's titled "The Devil's Metal," and yet it's outperformed everything. It's up 110% this year. So yeah,
Yeah, that's what I mean.
we are.
And the memes and the stupidity, it's whenever you're this much distracted, you got to question what's really happening.
Well, and it is, and this is why so few people ever succeed in investing and in getting ahead because they follow the herd. It takes a lot of effort to at the end of the day listen to you and I and for an hour and talk about this stuff, and it's much easier just to give the responsibility to your financial advisor. And this is not all financial advisors, but I would argue many of them learn more and more about less and less till they know everything about nothing. They focus singularly on one way of achieving retirement through mutual funds and stock certificates and bond issuance.
Right.
And for the last 50 years, that's worked. But here you have a 60-40 platform that Wall Street's used for 50 years, 60 stock, 40 bonds, and retire happily. Well, the chief investment officer of Morgan Stanley says that model's dead. Sell half your bonds, buy gold. The lead analyst at Bank of America, Michael Hartnett, says no, make it 25% gold. And Jeffrey Gundlach, the bond king, who's made his living selling bonds, the antithesis of gold, because it pays interest, says 25% allocation to metals is undervalued. So you have the biggest money on the planet, not only the central banks and the commercial banks and the sovereign wealth funds gobbling it up. You have the most sophisticated traders in North America standing for delivery on billions and billions and billions and billions and billions and billions every single month. Real quick, just to make that point, just in the first 12 days of the contract for December, which went off the board the day after Thanksgiving, and that was the night where they shut the market down for 11 hours because it overheated, supposedly. None of the other 1,000 commodities servers overheated that are traded on COMEX, just gold and silver as it was going off the board. But through day 12, deliveries have reached 58 million ounces of silver and 2.85 million ounces of gold, with contracts still being added daily. So who's got the kind of money to buy 58 million ounces of silver in the first 12 days of this month? Think about that for a second. Who's got the money to buy 3 million ounces of gold? Think about that for a minute. You're talking billions upon billions upon billions upon billions. So you have the biggest money in the world standing for delivery here in the United States, draining the LBMA. And now you have the Wall Street talking heads that are talking to the institutionals, right? They're not talking to you and me. Jeffrey Gundlach is not talking to you and me. The chief investment officer of Morgan Stanley is not talking to you and I. And Michael Hartnett's newsletter, the lead analyst for Bank of America, is in the thousands of dollars. He's talking to the institutional traders.
That's right.
And he's saying 25%. So, it's changing.
Yep.
It's changing.
The world is changing. We're going to see a lot of this coming down. We're seeing it now.